Hey, good morning. What's up with that? Although soon to be ex-president of Argentina, Cristina Kirchner, says she has no plans to remain subdued, opposition candidate Mauricio Macri took an early lead in yesterday's runoff elections and was declared the new president of Argentina. After 12 years of Kirchner in one way, shape, or form, I don't blame Argentina for wanting change. A center-right multimillionaire with a successful track record of running one of the biggest cities in the world will take over as president of the whole country on December 12th. And amen to change, political views aside. Back here in the USA, that was the week that was, with indices coming almost all the way back to levels before the previous week's havoc. The Nasdaq Composite actually closed within, I think, a 1% range of its all-time high. And you know what? I'm not sure that any traders really know why that happened. I mean, it could be some of the numbers that came out, the CPI up for the first time in 3 months, or housing starts, as predicted, were down, but permits were up a nice over 4%, I think. And I think Wednesday's FOMC meeting minutes reveal a chance for a small increase in rates. What? Wait. And the market went up? Okay, I don't know. My anonymous source, whom I will call the old fart from now on, says no interest rate hike. But I beg to differ, and I'll stick to my guns. I'm just heeding the old fart's advice to always have an opinion. I'm sorry, I don't know. But I think the Fed will want to cut off inflation at the pass. I mean, October hourly earnings saw the biggest jump since the recession. Excluding food and energy, CPI is at a 1.9% pace. Oil prices, yeah, they're at rock bottom, and yeah, they could continue to drop. I mean, I paid $1.83 at the pump this week here in Boulder. I think I paid that when I was a teenager, and believe you me, that was a long time ago. And by the way, the next CPI comes out in December, I think December 15th, that's one day before the next FOMC meeting. Cantor Fitzgerald CEO Howard Lutnick agrees with my old fart. But then again, he runs a financial company, doesn't he? And maybe he's talking his book. But I still give Lutnick the Quote of the Week award. When talking about interest rates, he said that the, quote, world economy is sort of going okay. End of quote. Sort of? Who is he? Donald Trump? Sort of? And talking about oil, once again this year, Mexico is about to rake in large profits from a one-year hedge against oil price rises. Not rises, the other way around. It is estimated that this year they will be collecting over $6.5 billion in profits, which goes to prove that the word hedge is not a bad word at all. In Europe, we're seeing more banks turn to negative interest rates. Yeah, negative. We all know that the ECB began last year to dip below zero and now charges banks 0.2% interest just to hold their money overnight. That means that by the end of the term, you get less money than what you put into the bank. That's a novel idea. Some European countries like Denmark and Sweden and of course Switzerland have moved their deposit rates below zero. Two outcomes are possible. One, the desired outcome would be for banks to start expanding their lending base and for investors and savers to start spending money. The other one is that savers will start placing money under the mattresses. That's an old Argentinian custom. And that banks will just freeze. You know what? Your guess is as good as mine. But in my experience, negative interest rates are not very effective in sparking economic activity. Feels to me like a punishment instead of looking at the root cause of the problem. This week, don't let that short trading week fool you with Thanksgiving interrupting what could be another rally. Lots of numbers coming this week, such as GDP, tomorrow expected to be, I think, 2.1% versus 1.5% the last time around. On Wednesday, durable goods orders, consumer confidence, and jobless claims. And remember, jobless claims stand at a 42-year low. New home sales, also to be released on Wednesday, are expected to be up after the big dive in September, but still not back to, but still below August levels. All in all, a fun week, and I don't expect Yellen to be distracted from the matters at hand, which no amount of turkey can put to sleep. Oh yeah, and I do believe the S&P will reach new highs before year end. Just thought I'd throw that in. And by the way, I wonder if Argentina will lead the way to a recovery in emerging markets or to a bigger crash. And I only say that because economists at Goldman and Barclays and other banks are basically saying that the emerging markets are bottoming out. I don't know if they're talking their book or if they know something that I don't know. In some corporate news, I got a big kick out of the fact that VW announced that they're cutting their R&D budget because of the emission scandal. Well, my God, they probably blew their budget for for 10 years trying to figure out how to cheat the world out of some fresh air. And in the latest mega merger, of course, in the healthcare industry, Pfizer and Irish company Allergan announced a $160 billion tax inversion deal, which actually means that Pfizer is going to pay a lot less corporate taxes. So the new enormous company in the merger is the merger basically of Viagra and Botox. And what's up with that? I don't know. I don't know. Well, anyway, happy Thanksgiving to all of you here and abroad. This is Abroad with a View, and thanks for checking in. Have a great week.